Have you ever wondered what the wealthy invest their money in? What are the assets they hold that differentiate them from the average person? These are questions that often pique our curiosity, don't they? Wealth, in its essence, is not just about having a lot of money. It's about the assets you accumulate over time. These assets are the real powerhouses of wealth creation. Think of wealth as a gigantic tree. The money you earn is like the water and sunlight it needs to grow. But the assets you accumulate are the roots that anchor it firmly to the ground, allowing it to weather any storm. They are what prevent your wealth from eroding away. The more diverse and robust your asset base, the stronger your wealth tree. So, what are these assets? Which ones should you be focusing on? Today we're going to explore the top 10 assets that the wealthy invest in. The first asset that the wealthy invest in is real estate. Now, why is real estate such a favored asset? Well, it's because it offers a multitude of benefits. One of the most attractive features of real estate is the opportunity it presents for generating passive income. Imagine owning a property, renting it out, and having that rent money coming in every month like clockwork. It's almost like having an additional paycheck, but without the 9-to-5 grind. But that's not all. Real estate also provides you with a potential for capital appreciation. Over time, properties generally increase in value. This means that not only do you get a steady stream of income from rents, but you also stand to gain from the increased value of your property when you decide to sell. In addition, real estate can be a hedge against inflation, providing protection for your wealth. Real estate, therefore, forms a solid foundation for wealth building. The second asset on our list is stocks. Stocks represent a slice of ownership in a company, and they are a fundamental part of the modern economy. When you purchase a stock, you're buying a piece of that company's future profit potential. But remember, with great potential comes great risk. This is where diversification comes into play. By spreading your investments across various stocks, you can potentially mitigate the risk. Understanding the stock market is crucial. It's much more than just numbers and charts. It's about comprehending global events, company performance, and economic trends. It's about assessing risk, managing emotions, and making informed decisions. Investing in stocks is not a get-rich-quick scheme. It's a long-term strategy that requires patience, diligence, and continuous learning. But the reward can be substantial. With the right approach and a bit of luck, stocks can provide remarkable returns if you understand how to navigate the market. Next on our list is bonds. Now, what exactly are bonds? Well, they're essentially IOUs issued by entities like corporations or governments that need to raise money. When you buy a bond, you're essentially lending money to the issuer in return for interest payments and the return of the principal amount when the bond matures. Now, you might be wondering, are bonds safe? Well, they're considered to be less risky compared to stocks. While the returns may not be as high, they're more predictable, which can be a real comfort, especially in volatile markets. So, where do bonds fit into your asset portfolio? They're a great way to balance out the risks associated with other assets. The steady income from bonds can offset potential losses from riskier investments. And that's the beauty of a well-diversified portfolio. It's all about balance. Bonds are a safer way to earn income, and they provide balance to your portfolio. The fourth asset is mutual funds. Now, what are mutual funds? Think of them as a pool of money collected from various investors. This pool is then managed by a professional who invests it in a variety of places like stocks, bonds, or other assets. One of the main benefits of investing in mutual funds is professional management. You have experts making investment decisions on your behalf. They conduct thorough market research and apply strategies to maximize returns and minimize risk. Another major advantage is diversification. Your investment is spread across a variety of assets. This reduces the risk of losing your investment if a single asset performs poorly. It's like the old saying, don't put all your eggs in one basket. In essence, mutual funds allow you to invest in a broad market portfolio without the need to buy each individual security. You get the benefits of a diversified portfolio without the hassle of managing it yourself. Mutual funds offer a way to access a diversified portfolio with professional management. Halfway through our list, we have business ownership, a fascinating asset that offers the potential for massive growth and the satisfaction of creating something from the ground up. Owning a business isn't just about the profits, it's about the sense of accomplishment, the freedom to make your own decisions, and the ability to control your income. Think about it. When you own a business, you're not just earning a salary, you're building an asset that could potentially increase in value exponentially. You have the power to shape the business according to your vision, to innovate, to disrupt industries. But let's not forget, with great power comes great responsibility. Running a business requires dedication, resilience, and a willingness to take calculated risks. There might be hurdles along the way, but the rewards can be immense. So, if you've got a great idea and the passion to see it through, business ownership could be your ticket to wealth creation. Owning a business can be a game changer, providing both income and personal satisfaction. The sixth asset on the list is precious metals. Now, you might be wondering, why are gold, silver, and other precious metals considered assets? Well, these shiny treasures have been valued for their beauty and intrinsic worth for thousands of years. But beyond their allure, precious metals play a crucial role in the world of finance. One of the key reasons they're considered assets is their ability to act as a hedge against inflation. In times when the value of money is on a downward spiral, precious metals tend to hold their value. They can even increase in worth. This makes them a reliable store of wealth, standing strong against the economic winds of change. Moreover, during periods of economic uncertainty or instability, precious metals often become a favored investment choice. They offer a sense of security that's hard to find in the fluctuating world of stocks and bonds. So, remember, precious metals can provide protection against economic uncertainty. Next up, we have cryptocurrency. This digital or virtual asset, built on blockchain technology, has been on a roller coaster ride since it first hit the scene. Bitcoin, Ethereum, and countless others have made headlines with their value skyrocketing and plummeting in equal measure. Cryptocurrencies present a fascinating opportunity for wealth building. They've shown the potential for astronomical returns, with some early investors making fortunes. However, this potential comes with considerable risk. The value of cryptocurrencies is highly volatile, with prices that can swing wildly in a matter of hours. While the potential for high returns is attractive, it's crucial to exercise caution. Crypto is a relatively new and unregulated market, which makes it susceptible to market manipulations and fraud. Therefore, it's important to thoroughly research and understand the crypto market before diving in. Cryptocurrency is a high-risk, high-reward asset that has the potential to be a game changer. So, are you ready to explore this digital frontier? The eighth asset is art and collectibles. Now, this one's quite different from the rest. It's not about charts, graphs, or numbers, but about aesthetics, history, and sometimes just pure emotion. Investing in art and collectibles can indeed be a lucrative venture, but it's not for everyone. Why? Well, it's because this field requires not just capital, but also a deep understanding and passion for the works involved. You need to know the artists, their history, the significance of their works, and the trends in the art market. A painting or a vintage car isn't just a piece of canvas or a hunk of metal. They're potential gold mines that can yield high returns if you know what you're doing. But remember, just like any other investment, it's not without risks. The art market can be volatile and values can plummet just as fast as they can soar. So, do your homework, follow your passion, and invest wisely. Art and collectibles can be a profitable investment if you know what you're doing. The ninth asset is intellectual property. Now, this might not be the typical tangible asset you'd picture when thinking about wealth, but let me assure you, it's just as valuable. Intellectual property, often referred to as IP, is a category that includes unique creations of the mind. We're talking about inventions, literary and artistic works, designs, symbols, names, and even images used in commerce. These can be protected by rights like patents, trademarks, and copyrights, granting their creators exclusive control over their use and, yes, their monetization. This exclusivity can turn into a source of passive income. Think about a catchy jingle you've written being used in commercials, or a patented invention being licensed to corporations. Each use can mean royalties in your pocket, but that's not all. The potential for growth here is immense. As technology and society evolve, new arenas for intellectual property are emerging, creating fresh opportunities for innovation and wealth creation. Intellectual property can generate passive income and has immense potential for growth. Finally, we have cash and cash equivalents. You may think of cash as just the bills in your wallet or the balance in your checking account. But in the realm of wealth building, cash and its equivalents take on a broader meaning. They encompass not only physical currency and demand deposits, but also highly liquid short-term investments like treasury bills and money market funds. Cash and its equivalents are a vital part of any wealth-building strategy. Why, you ask? Because of one key word: liquidity. Liquidity refers to the ease with which an asset can be converted into cash. The more liquid an asset, the quicker you can use it when opportunities arise. Imagine a scenario where an incredible investment opportunity comes your way, but it won't wait. With a healthy amount of liquid assets at your disposal, you can jump on that opportunity without missing a beat. Cash and its equivalents provide liquidity and are essential for taking advantage of investment opportunities. Let's recap the 10 assets that the wealthy invest in. Real estate, a tangible asset that often appreciates over time. Stocks, which provide ownership in a company and potential dividends. Bonds, a safe and stable investment offering fixed returns. Mutual funds, a diversified mix of stocks, bonds, and other securities. Business ownership, an opportunity for direct control and high rewards. We also talked about precious metals, a hedge against inflation and currency fluctuations. Cryptocurrency, a digital asset with high risk and high potential returns. Art and collectibles, unique assets that can offer both personal enjoyment and financial gain. Intellectual property, a less tangible asset with the potential for ongoing income. Finally, cash and cash equivalents, secure assets for liquidity and stability. Each of these assets plays a critical role in wealth building, offering different levels of risk, return, and control. Remember, wealth building is a journey, and these assets are your tools for the journey. Choose wisely and invest wisely.